You might have heard that the IRS made an important announcement about a change to the mileage rate for the 2022 tax year. This is an unusual change for them because it takes effect in the middle of the year, and normally they would make this change at the end of the year, and it would be in effect for the entire next year. So this video is going to tell you all you need to know about how to handle this change and how to make sure you get the full value of the deduction for all the miles that you drive for your business. Let's dive in. So let's talk about why the IRS made this change. So at the very end of 2021, December 17th, they issued this guidance that the mileage for the upcoming year is going to be 58.5 cents per mile. This is our starting point, and the reference for this publication is linked below. But on June 9th, as you'll see here, June 9th, the IRS issued updated guidance that takes effect on July 1st, 2022. This article is linked below as well. In here, you'll see where Chuck Reddick, the IRS commissioner, said that the IRS is adjusting the standard mileage rate to better reflect the recent increase in fuel prices. Now, using the IRS mileage rate is what I recommend for the vast majority of businesses instead of using the actual expenses method. This rate is meant to be a comprehensive amount that takes into account all the expenses that you bear when you drive your car for business. It's supposed to take into account that wear and tear and the maintenance and the insurance and the depreciation and things like that. On average, across America, this is the agreed upon amount of the total costs a business owner bears while driving. By the way, if you need some help with mileage tracking, and especially if you are a FreshBooks user, you can watch this video that should be popping up, and it's also linked below. It's about tracking mileage and using the FreshBooks mileage app. So how does this mileage rate change affect you as a business owner? First, I want to distinguish between two groups of businesses. Those of you who are sole proprietors or single member LLCs have to handle this change one way. But if your business has grown and you made an S-Corp election so you can save on taxes by running payroll on yourself, then you have a very different process to claim mileage. That process is called using an accountable plan. An accountable plan is how you reimburse yourself for your home office and for your mileage expenses if you're an S-Corp or partnership. And we'll get to you in just a second. But the sole proprietor, single member LLCs who file the Schedule C tax return are a lot easier because they just get to claim mileage right on their tax return. So let's look at them first. Again, those sole proprietors get to plug their mileage right here into this Schedule C, which is their tax return. I'm going to show you this on my last business tax return where I was a single member LLC without an S-Corp election, and I filed the Schedule C. This was back in 2019. So right here in the middle of the first page of the Schedule C, you have an item called car and truck expenses. So for 2019, I got a $135 deduction. Let's figure out where that $135 came from. On the second page of the Schedule C, there is this part about whether I used my vehicle or not. And I drove 232 business miles. And so the way the tax software works is that in 2019, I think the rate was just 58 cents, no, not 58.5. And so it's going to multiply the amount of miles I drove, and it's going to put them in that line on the first page and give me the dollar value of the deduction that I was able to take. So for me, I got a $135 deduction on my taxes, my business return. It was a non-cash deduction from a bookkeeping standpoint, but for my taxes, it reduced my net income by $135. So I got to pay a little bit less in taxes on my business income. So that's what you would do if there was just one mileage rate. But in 2022, your calculation is going to have two components that you add together instead of just one component of mileage times the mileage rate. Your equation is going to be January 1st through June 30th total miles times 58.5, and July 1st through December 31st total miles times 62.5. So let's just plug in some real numbers here. So this column over here will be for the first half of the year. Let's say you drove 300 miles, 58.5, let me change that, is the rate. It's 175.50 is the value of the deduction for the first half of the year. Say in the second half you drove 500, the rate is 62.5 cents. So your total would be 312. And so for the year, you're just going to add these two together, and you will have your total deduction that is going to go on that Schedule C. So just keep tracking your mileage by date, and you'll easily be able to tally your totals for next year when you file your taxes in the spring. Now we got mileage deduction for S Corps and partnerships. Now things are very different if you made that S Corp election or a partnership or an LLC with multiple members. You do not have an easy place to claim your mileage deductions on your tax return. So you have to use what is called an accountable plan to reimburse yourself throughout the year. This is for home office and for mileage. I have a video that's very thorough about how to implement an accountable plan in your business, and I also have the template available for anyone who needs it. Side note, I actually provide the template for free for business owners who are part of my weekly office hours. My office hours are a service that I offer smaller businesses, which is weekly live office hours and ongoing written support for business owners who are using FreshBooks for their bookkeeping and are doing their own bookkeeping, but need a bookkeeper, kind of in their back pocket to offer support and answer questions until they're ready to outsource their bookkeeping. So if that is you, you can learn more about the office hours in this video that's popping up right in here, and also that's linked down below. Oh, also note, if you are using a different bookkeeping software other than FreshBooks, you can still watch the tutorial and get the spreadsheet, and it works totally fine. It's software agnostic. So let's come here and walk through my accountable plan spreadsheet. Any accountable plan is going to be set up similarly. So you will go to this template, and you're going to change the spot where you're doing your calculation for that mileage deduction. For my clients using this template, it's cell D50. And so when you go to use this and create your accountable plan for your July travel, you're going to want to come into this cell and just change it to 62.5. And so let's just pretend we drove some miles here, total business miles driven, let's say 800. It's going to calculate $500 if we left it as 58.5. Ruh-roh. Not 58.5, 0.585. It would only be 468. So we're going to get that extra benefit by changing that cell. So it's just that simple change that you need to make if you're using my template. And then you would write, you would take your mileage and any other home office expenses that you are claiming and write yourself a check, or probably more likely just send a draft over from your business account to your personal account and get that reimbursed and get more money back in your pocket. All right, so let's recap and wrap up. Oh, but before we do, make sure you're subscribed to the channel, especially if you're a FreshBooks user. All right, because gas prices are skyrocketing as the economy is struggling with inflation, the IRS made an unusual move to change the mileage rate for 2022 in the middle of the year. And all the miles that you drove between January and June are 58.5 cents per mile, and the miles that you will drive in July through December are 62.5 cents per mile. If you're a sole proprietor or single member LLC, you have some pretty easy math because you're just multiplying the amount of miles you drove in the given period by the appropriate mileage rate and adding those two numbers together. And you will put that figure on your 2022 tax return next spring. As of this recording, the Schedule C for 2022 has not been released, so I'm not sure if they're going to have the two boxes to try to do this math for you, or if you will be doing the math and then just getting the one box where you'll have to do the calculation for the two different rates yourself. But at least now you know what you have to look for. If you are an S Corp for tax purposes or an LLC that has multiple owners, you have to have an accountable plan throughout the year to claim business miles as a business expense. So you won't want to be waiting until next spring to get this deduction. You're going to be paying yourself those small bank transfers or possibly large bank transfers every month for all of your home office and mileage expenses because there is no place to put those expenses on your tax return directly. You can watch my video about accountable plans to learn how to do that on your own to reduce your business income for the qualified home office and mileage expenses. So accountable plans are very important. All right, we're done. If you ever need any help with your bookkeeping, please reach out. If you want an accountable plan template, please reach out. And if you want to join my FreshBooks office hours, please reach out. I'm Kate Josephine Johnson, and I help businesses build their business legacy.